You're listening to Mind Over Money, presented by Waymaker. Hello, it's Lachy here. Hey Archie, are you there?
I am here. G'day Lachlan. G'day everyone. Great to be here again.
Yeah, so today we're talking about interest rates. So if you haven't heard, you might have been under a rock. The RBA has lifted the cash rate and every journalist in the country has been talking about it. And so there's lots of noise, lots of hype. And so, yeah, today we're just going to have a conversation about it and, help you navigate this season of rising interest rates and really just separate what is that hype and that noise from the facts, and talking about practical things that we can do to assess your home loan and navigate and pay down your home loan in this season. Excited to have this conversation, Archie.
Yeah, this is going to be a great conversation. We really want to get rid of that hype and that noise, and that panic, because that won't help us. Confidence is always the key. And so when we can get in and look at stuff and, find a way forward, that gives us the confidence to succeed and do really well.
So one thing we did know was that rates were going to go up. What else about rates, do we need to know? Like how do rates work in our economy?
So interest rates, they're used by the government to also help manage spending, manage inflation, because majority of Australians do use a variable rate interest rate. And so that allows the government to change the interest rates using the Reserve Bank for their monetary policy. And so therefore rates go up and down depending on what the government and the Reserve Bank of Australia are trying to achieve. And so we've seen rates drop dramatically as part of COVID to help promote cash flow in the economy and to promote the economy to keep building while we went through COVID.
So what do you take about all this noise that's going on right now? Do you think people are over concerned? Is it really as doom and gloom as all these media articles are saying, or is it just all noise?
It's definitely all noise, and it's not doom and gloom. We saw back in the 80s interest rates up to 22%, and we got through that. So, everything will change, and that's just normal. Everything's going to change. And the best thing for us, from a financial point of view, is have some resilience, have some flexibility, and change as things change. So that's what we really want to talk about today. How do we change things so that we are actually still, happy where we are? We're not at the mercy of all this noise and all this junk that they're throwing out there at the moment.
Yeah, so it's all about adjusting as we go. So let's talk about that. What are some of the issues that prevent us from adjusting with our home loan and with interest rates?
Believing the hype, that the media are portraying. That's the thing that'll stop us from doing anything. And also, don't trust your bank. The banks are there to make a profit, and if they can make a profit out of you, they will. So what we're seeing is, we're still seeing people on interest rates of 3.5%. And, the current interest rates are anywhere between 1.89 and about 2.2% for most people, taking out a loan right today. And so if your bank's got you on 3.5%, they're not looking after you. That's where you really got to question, well, should you be with that bank? Too many of us assume that the bank's our friend, and the bank is definitely not our friend.
So we've seen in the last couple of years, banks have a real push onto these fixed rates. How does that affect people when it comes back to adjusting as we go with these interest rates coming back up?
People get put onto these fixed rates thinking that they're locking in and they're protecting themselves. They're actually not protecting themselves. I see people after a fixed rate term finishes go into a mad panic because they're worried about what do I do next, because suddenly the interest rates are 2 or 3% higher than what they fixed it at. And that's a massive jump in their repayments, and they're not ready for it. So using fixed rates can really get us into a bind, and we lose our flexibility because what the bank does with that fixed rate home loan is they sell it on to someone else. And so if you want to break that fixed rate contract, you have to pay out the interest that third party was going to earn from when they bought your fixed interest rate loan. So what you're effectively doing is you're bringing another third party into the equation, and you're losing control over your home loan, and it can cost you quite a bit of money to get out of it. And then all this fear is generated around these things. So when it comes to fixed rates, now can be actually a good time to break a fixed rate. So if you're locked in at a fixed rate at 3% and you could actually get a rate at 1.89%, it could be really well worthwhile breaking that fixed rate and getting yourself back down to 1.89. And that's 1.89 now with the interest rate rise that we've just had.
Yeah.
So that's how low you can go at the present time.
So let's have a look at rates. But before we dive onto that, what do you think is potentially going to send people into financial stress? Is it really these home loan rates, or is it all the other money that people have borrowed, after the loan?
Yeah. If you look at home loans, they're generally similar to paying rent. So the home loan's not usually the issue when it comes to people getting financially stressed, unless they've borrowed way too much. If you've borrowed 8 times your income and something suddenly happens to your income, you can be in great financial stress because of your home loan. And that's the sort of stuff that APRA's looking after.
Yeah, we saw some data come out recently saying more than 1 in 5 Australians have actually taken out a mortgage that they borrowed at least 6 times their income. So there is a portion of people that it could be difficult with that amount of that they borrowed if they have an income, if they have a change in their income.
Oh, definitely. Or a change in interest rates, because they're borrowing such a large amount compared to their income. So we've got 1 in 5 people there that could be stressed because of that. But for the rest of us, it's a different story. It's all about what other debts we have. And we do live in a debt society now. So pretty much everything is sold to us on debt. Everything from children's braces, teeth braces, right through to car tires, through to cars themselves, personal loans, holidays. It's all sold on debt. You join a holiday club and they'll sell you, a timeshare in a holiday club situation. And the first thing they're going to do is offer it to you with debt. They're going to lend you the money for it. And so it's very easy for us to be borrowing too much outside of the home loan. And that's the sort of stuff that's going to put us into financial stress.
Yeah, because with talking about that noise, we're seeing articles already come out, people saying, I'm going to lose my home, I'm going to lose my home. But they're not seeing the whole picture. They're not covering the whole picture of what's happening in some of these people's world, where they have actually got all this other debt that they took out after the home loan. And actually, that's the thing that's going to send them into stress. Not so much the interest rates. It's, the car loan, the buy now, pay later, the personal loan. These are the things that we want to clean up and get rid of those things.
Yeah. So if you're sitting there at the moment, with a normal home loan, and you don't really have much other debt, right? And you shouldn't be panicking. You're actually in a good position to get in and adjust your loan now, especially when we take into consideration how much property prices have increased. And so that puts us in a better position to actually get a better loan. And so we can potentially reduce our interest rates from maybe 3.5 back down to 1.89. And so that'll save us quite a lot of money. We can actually find that for a lot of our listeners, you're in a great position to do something, and something that's going to really benefit you right at this moment because of what's happening.
Yeah. And to add to that, the banks have actually assessed and stress tested all of these loans. So at about 2 to 2.5%, is it?
Yeah. So all new loans over like the last 5 years or more have been stress tested at 2 to 2.5% higher interest rates. So if you took out your home loan at 3.5% interest rate, then it was stress tested at about 5.5 to 6%. So if you think about that situation where you took it out at 3.5%, it was stress tested up to 6%, you're actually in a good position. And you can look at refinancing and getting yourself a good home loan, getting yourself in a better position. If you've taken out your home loan at 2%, well, you've been stress tested up to about 4.5%. And what we're expecting is that interest rates over the next 2 to 3 years, could go up by about 2%.
Okay, so let's have a look at that with the calculator.
Yep.
So we've got a 400K loan here at 2%, and it's showing a repayment of about $14.78. $1,478 a month over 30 years.
Yep.
Let's increase that to 4%.
That repayment now is $1,910 a month over 30 years.
It's about $100 a week more. So $100 a week isn't going to break the bank for most people. Like we said, if you've just got your home loan and you've got no other debt, that's a nice dinner at restaurant with friends. What's going to break the bank is if you have a car loan, credit cards, buy now, pay later apps, all of that. Let's have a look at $800K loan on 2%. What's that?
$800K on 2%. That's pretty much double what we just talked about with the $400,000 loan.
Yep.
So your loan repayment at 2% is $3,000 a month. And then if we increase it to a 4% interest rate, your loan repayment goes up to $3,800 a month. So basically it's $200 a week more. And generally on a bigger loan, you should have a bigger income, and the percentages of your income are still going to be the same. So whether you got a $400,000 loan or an $800,000 loan, percentages compared to your income should be very similar. So you should find that this shouldn't really stress you out.
Yeah. So what can we do? What are some tips of how to get into a great position going forward, and how can we be, flexible and adjust with these rates?
Number one thing when it comes to home loans is pay it down as fast as possible, because if you spend two to 5 years, really getting in and paying down your home loan, you're never going to find yourself in a position where you're stuck. You're going to set yourself up for a great win. It's only where we don't pay down the home loan and we just live, making the minimum repayment, we could find ourselves in 5 to 10 years going, I still owe as much as what I took out originally. And especially if we keep refinancing our loan. So the stats show us that if we refinance our loan, we restart everything again. And so we can actually find that, we refinanced it, we got a lower repayment, but here we are 5 and 10 years down the track and we still owe the same amount of money that we borrowed at the beginning. And we haven't made any inroads to our home loan. So it's getting that mindset to actually pay down our home loan and, break that, the hard rock basically of the home loan by getting in there early and paying it down. Because that's where you get your biggest wins.
Yeah, break the back of the loan. So that's paying down as much capital to start breaking down that interest rate and getting ahead. Yeah, and providing also a buffer as well for the future.
Yep, but it also puts you in a good position to keep being able to adjust your loan and change your loan to get those better interest rates. Not to get a better interest rate so you pay less, but to get a better interest rate so you pay your home loan off quicker. So it's all about that mindset about paying off that home loan.
Yeah, I love that mindset. And that's the key there. And then that 1.89%, for example, that was with a really good LVR. So I think that was with a 60% LVR.
Yeah, that's a 60% loan to value ratio. So if your house price has gone up, say your house price has gone from 500,000 to 600,000, you could actually find, and you've been paying off your home loan, you could actually find that you're below that 60% loan to value ratio, and that you would qualify to get that 1.89% interest rate.
Which then helps you to pay off the loan even faster. And ultimately, It's about getting this loan paid out as quick as possible so we can free up that cash flow for the future when we're going to need it the most.
Yeah. People with the biggest smiles on their faces are the people who don't have, they're not worried about the home loan.
Yeah.
If you know you're winning on the home loan, you got a smile on your face. And if at the moment, you feel like you're not sure about things and you're really worried, the best thing to do is see a mortgage broker. Don't see your bank, see a mortgage broker, and check out what the mortgage broker can actually offer you. And if you've got an existing mortgage broker, go see them and find out what they can do for you.
Yeah, because your existing broker can actually usually get you a better rate on your current bank without breaking the loan that you've maybe just taken out recently. You don't have to keep jumping banks all the time.
Yeah, that's right. We do that in our mortgage business regularly. Is we check out what the interest rates are. We check out the client's loan to value ratio and their current situation, and we'll go back to the bank and say to the bank, you need to give this client this interest rate. And if the bank won't come to the party, then we look at moving to another bank. That's part of what a mortgage broker should be helping you to do. So it doesn't cost you anything to go to your mortgage broker and get a new valuation done, because they've got an existing loan there and we can get another valuation done So we can look at the better banks and the better rates, and we can get valuations done, and then we can either work with the existing bank to get you a better rate, or we actually can switch the loan over to a better loan with another bank. But it's just work with your mortgage broker, because they're in the position to do the most for you.
Yeah, the banks can play tricks. Hey, we've seen these examples where they come in at the 11th hour and try and win someone back, or try and offer a fixed interest rate to lure someone over to a supposedly better deal.
What we found with the big banks is that we'll help a client find a good loan as a mortgage broker, and they might have an existing bank, one of the big banks. And then, right at the end, when everything's ready to go through and the new loan started and cancelling the old loan, the bank will ring the client and say, we'll match whatever you're doing. And the thing is, I often say to people, look, your bank's probably going to do this, and they've never helped you in the past, so why would you stick with them when they've never looked after you in the past?
Yeah, don't reward them.
Yeah, don't reward them for that. And then the other thing is, your mortgage broker has just done all this work for you and is only going to get paid based on the commissions from the new loan. So you're going to take away the income from your mortgage broker if you go with the existing bank. And that's why I was saying before, if you've got an existing mortgage broker, make sure you go see them, because their income and their ability to service you and look after you is based on your loan. So they're in the best position to look after you. Because otherwise, if they've done a whole pile of work getting a new loan in place, and then you suddenly go and get a loan somewhere else again, they can potentially lose all their income that they earned from your loan, and that's because we have this thing called clawbacks, and that's where the bank will actually claw back the money. So it's a win for the bank, because the bank gets the money, and the mortgage broker who's done all the work gets nothing.
So look after your mortgage broker, because they're looking after you.
Yep.
And watch out for the tricks with the banks.
Yeah.
Okay. So summing up, it's not as doom and gloom as the media might say. If you've got a loan, you've been paying down that loan, you haven't been taking out other debt. You should be in a great position, as stress tested with the banks, to keep paying that higher rate, and look at your valuation with your broker as well. Because you potentially could be getting a better rate at the same time as the rates are going up. You might find with a potentially increased property value, you might be able to refinance and get a better rate of what you're currently paying, and continue to have that smile on your face as you keep paying down your loan.
Yeah. Oh, I love it. I love this podcast that we've just done, because it really shows that when we look at the facts and what's going on out there, for a lot of people, you're going to be in a great place, and you can make adjustments, and you can do really well out of this. For some people, yes, you're going to be in a tight spot, and don't ignore it. Get in and sort it out, because I've seen too many people in the past be declared bankrupt because they didn't get in and do something. And when you're declared bankrupt, you lose your house. So, and it's not the bank who's going to declare you bankrupt. It's going to be one of those little loans off to the side. Could be the car loan, it could be the credit card, it could be the, something else that you've taken out. That's the sort of stuff that can send you bankrupt. And that's the sort of stuff where you can lose your house, and it's not the bank, and it's not your home loan. So, so I find that there's just so much on offer, so much we can do. And, change is good, because this gives us opportunity to get in and, keep working on our finances and keep succeeding.
Okay. Well, we'll be back next week with more discussions around finances, building wealth. And I think this is a really helpful conversation. For anyone who's listening and wants to speak to a mortgage broker, click the link in the show notes, because we'd love to have a chat and help you.
Definitely.
Okay, Archie, chat to you next week.
Thanks, Lachlan. Thanks, everyone.
Just a reminder that everything discussed today is for education purposes only and does not consider your personal financial goals or situation. So if you're looking for personal advice, we highly recommend you speak to a financial advisor. Or if you're looking for a home loan or to refinance your loan, then why not reach out to us at Waymaker? We'll connect you with one of our mortgage brokers who can help you navigate getting into your home for the first time, or perhaps upgrading the family home. Either way, you can find these links to get help at the waymakerpodcast.com.au. That's waymakerpodcast.com.au. Thanks as always for listening to Mind Over Money podcast where we help you change your mindset around money to help you live a life of greater freedom, generosity, and joy. We'll see you next time.